Homegrown Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Well, let's check where we finished on Friday. Global stocks mostly lower as investors considered political uncertainty in Europe and also in Europe. Also the US, I should say, as well as Europe. Treasury yields were higher as US inflation data came in line with expectations, yet this weighed on stocks with the major indices on Wall Street retreating from earlier gains. Rounding out the quarter, the S&P 500 gained 3.9%. The Nasdaq was up 8.3%, while the Dow lost more than 1.5%. 30% of the S&P's returns this year have come from Nvidia alone, which has risen 150% since January. Now on Friday, Nike had its steepest one-day fall in more than 2 decades after forecasting an unexpected fall in fiscal 25 revenue, which dragged the broader consumer discretionary sector lower. Infinera shares surged after Nokia said it would acquire the company in a $2.3 billion deal. And cosmetics company Estée Lauder fell on concerns about China weakness, with rival L'Oreal giving a lower market growth forecast. Well, US prices were unchanged in May, while consumer spending rose moderately. In the 12 months through to May, the personal consumption expenditure index increased 2.6%. with core inflation rising by the same amount year on year, which was the smallest increase since March 2021. The US Treasury yields reversed earlier declines to trade higher on Friday as uncertainty around the US presidential election rattled investors. The 10-year yield was at 4.34%. That's around 18 basis points lower on the month. The 2-year was unchanged at 4.72%. The US dollar slipped after that benign inflation data. The Aussie dollar trading at 66.8 and the euro is in focus for traders. Following the first round of French parliamentary elections, which has seen Marine Le Pen's far-right National Rally Party win according to exit polls with 34% of the vote, while President Emmanuel Macron's centrist Together alliance has captured under 23%. The second round of voting takes place next week to determine who wins control of Parliament. All right, let's get across what we're seeing on global markets with a particular focus on New Zealand. Greg Smith joining us from Devon Funds Management. Greg, good to catch up with you on this Monday. How have you opened there?
Morning, Andrew. Yes, we've opened positively. So NZ50's up 0.56% at the minute, 11,783. We're coming off a fairly flat half, actually. So I think the market sort of was down about 0.5% for the first 6 months of the year. So we've started off positively. There's not a lot announcement-wise today. It's been the case sort of recently. So more been looking at sort of macro releases and obviously also what's happening offshore. So our market was actually closed on Friday, but we did have a read from ANZ on both business and also the consumer. And yeah, both showed both areas are pretty tepid. But I suppose the good news was that inflation expectations are coming down. Price intentions are moderating as well if you look at businesses. So I think that's sort of part of the thematic, and our market also probably potentially catching a bit of a tailwind from those inflation numbers in the US, which sort of were pretty much in line with estimates. But obviously a bit of a milestone in being the lowest for 3 years on an annual basis.
Yeah, as you say, macro is certainly a feature as far as investors looking for some direction at the moment, not the least, of course, being the reads on inflation. How do you see that panning out at the moment? Clearly, the focus here in Australia is that a hotter than expected number we got last week, which has proved to be pretty skittish as far as markets are concerned. What are you seeing on your side of the ditch there? Because, of course, the RBNZ went harder and faster with its monetary policy, taking it above where we're at. Has that had the desired effect?
I think it has. Interestingly, the day you had your hot print over there, our market was actually pretty strong. So we probably have lagged a bit. So I think generally inflation is coming down here. A lot of the I suppose the import inflation or sort of offshore driven inflation had been coming down for a while, and we're also seeing cooling of the domestically driven inflation as well. I mean that hot demand that we saw a year, 18 months ago, that's certainly gone. You've still got lots of people coming off quite low mortgage rates. You can sort of see it out there, sort of on the high street, and just generally that spending has been sort of tucked in. Activities moderating. We're seeing that with businesses. We're seeing vacancies drop. We're seeing the employment market get a bit looser. So this is all quite pivotal. And as I mentioned, both business and consumers are sort of seeing this at the same time. We've got the RBNZ meeting next week. We were one of the first central banks that we've talked about before to raise rates. The mood displayed by Adrian Orr to date has been quite hawkish. He's saying no rate cuts until next year. The market's pricing in August to September. That feels a bit more likely, just to the degree to which our economy is softening. So I think we're an export-driven economy as well, and obviously we don't know what's happening with China. So I think we benefit as well if we see our exchange rate sort of come down further, and it has gone down versus the US, given what's going on over there. So inflation's certainly moderating here, but I think we really do need a bit of a helping hand from the RBNZ. But I think we are taking a little bit of positive read from what's happening in the US as well. So I think markets are pricing in around about a 60% chance of the Fed cutting rates in September. So going with 2 rate cuts this year, the notion that where the Fed goes, maybe the RBNZ might follow a bit. But it remains to be seen on that. But certainly the markets are saying the RBNZ is going to cut rates a lot sooner than what they're officially saying. So that meeting will be very much of interest next week.
Greg, do you see politics having a significant impact on markets at the moment? Clearly, in the wake of the presidential debate, speculation about whether Joe Biden is actually going to contest the next election. Then, of course, we do have the first round of the French elections, which did transpire as expected. Nonetheless, there is some movement there, particularly, I guess, on a currency level. And then, of course, we've got the UK election this week as well.
That's right. So we are get sort of fireworks on the 4th of July. Not so sure about that. I suppose one thing that's sort of towards even with the French, early results so far is that polls, can be taken with a pinch of salt. So there was meant to be sort of a bit, not quite a landslide, but a comprehensive result for Macron's sort of opponent. But that doesn't look to be sort of playing out. And then obviously there's a second round. So I think you saw that initial reaction with those European results a couple of weeks ago. And that sort of shift away. And then, similar sort of thing is happening in the UK. I mean, Sunak is expected to lose by quite a hefty margin. So, but you can only sort of place so much in polls. We've seen that time and time again over the years. I think it is something markets do pay attention to, and particularly, with, I suppose, with certain policies that may be brought in. I think you mentioned the presidential debate, which is an interesting one. I mean, it's universally regarded as a pretty bad one for Biden, and question marks over whether he'll actually contest things later in the year. I suppose on the other side, whether it's him or whether it's someone else, the bigger question is, does Trump get in again? Obviously, for Australia and for New Zealand, China is a big customer. We've already seen the US and Europe sort of either move to or already implement higher tariffs on EVs. So if we get back to that state of play where trade frictions are heating up again, that you can't imagine that would be particularly positive for the situation, particularly involving sort of one of our largest, if not our largest, customers. So I think that's what we're paying pretty close attention to. The results in the UK and France are very interesting, but I think there's a lot weighing on that US election later in the year.
Greg, equity-wise, how are you seeing the year to date, given we're halfway through the calendar year, of course, and clearly the US market has outperformed, particularly compared with both your market and also the one here?
Yeah, that's right. So our market was down 0.5% over the first 6 months of the year. I think your market had a pretty good financial year to 30 June, but if you look at the calendar year, I think you're up around about 2.3%. So where technology was your best sector over there. We don't really have a technology sector here as such, so that's been a bit of a drag here. You look at the US, the Nasdaq was up around about 18%. You've got Nvidia up 156% over the 6 months of the year. So we're sort of missing out a little bit there. I think it's still this notion: do we see a bit of catch up at some point? I think we saw glimmers of it recently in the US, when you saw like the likes of the Russell 2000, the mid small cap index, and to a certain extent the Dow had a string of good sessions, whilst tech was a bit weaker. So do we see that ongoing in the second half? Look, AI it's not going to go away. It's still going to be a big theme for the second half of the year, and we're probably not going to know, I think, till much later next year how this all plays out in terms of growth. And there's been talks about Nvidia. Are we getting ahead of ourselves? Is it the next Cisco? Is it a repeat of the dot-com sort of mania that we saw? Has been an earnings-led story. So, but it just how that all plays out, no one really knows. But there's a lot of value, I think, in the more traditional areas of the market. Bring it back home for Australia and New Zealand, I think China's very key. For New Zealand, we're very much a high dividend yield market, so we're very sensitive to interest rates. So if we see those coming back down, that probably provides a bit of a tailwind to our market. The Gentiles have had a bit of a break recently from TY contracts being extended out for 20 years, so that's good news there. So you would hope for a bit of pickup for local investors, a bit of a rotation to some areas of the market that present a bit more value. But if now it's a bit of a freight train with Nvidia and the likes. Also, let's not forget the weight loss drugs as well. I mean, I think Eli Lilly was up over 55% in the first 6 months of the year. So again, we don't have any of those sort of names. So two pretty big thematics have carried a lot of the weight sort of in the first 6 months of the year. But I don't know. We might be due for a bit of value catch up in the second half.
Fingers crossed. Greg, thanks for joining us from Devon Funds. Enjoy your week.
Thank you. Thanks so much. Bye for now.
Well, let's take a look at what's ahead this week. Locally, we get national home prices from CoreLogic. They're out today, along with Melbourne Institute's inflation gates for June and job ads for the past month. Tomorrow, the RBA releases minutes from its June meeting. Retail sales data comes out for May on Wednesday, along with new vehicle sales for June and trade balances revealed on Thursday. Overseas, there's a reading of Chinese manufacturing today, while the US ISM manufacturing index comes out tonight. US Fed Reserve Chairman Jerome Powell speaks on Tuesday, which coincides with the US job openings for May. Wednesday sees a raft of US economic data, as well as the minutes from the Fed's June meeting. US markets are closed on Thursday for the Independence Day holiday, and on Friday, US non-farm payroll data is released. Quick check of the market. We're expecting a lower open when we get going in just a minute or two. Stay with us because the open is just around the corner.